In this video, I want to talk about 1,000 troops headed off to Iraq and Iran and what that's done to us. Wars and rumors of wars. How to trade wars and rumors of wars. Nothing works better than trading a big news event. And in this case, 1,000 troops going over to Iraq or Iran is going to move the energies market. They're going to move crude oil. So whenever you hear news like this, you need to think in your mind, how is that going to affect the markets? Because this is how you're going to capitalize on trading. So let's come in here. Yesterday, Donald Trump announced that he's going to send 1,000 more troops over to Iran. So what's that going to do? That's going to cause tension in the Middle East. Middle East is where all the oil is. So we're going to anticipate a rise in price in oil. It's that simple. Okay, so the first thing we want to do is we want to come in and look at the price of oil. This is oil. This is on the futures market, of course, because that's where we trade oil. Over on the commodities market, oil is a commodity. And we're going to come in here, and I want to show you the key first of all. All right, the key is very important because this is going to tell you your investment. You need to have an account with a brokerage firm to trade oil, and you need to have in there a day margin to trade this for, if you're going to day trade it, $1,000. So you're going to have $1,000 into your account, in your day trading account, to trade one contract. All right. If you want to hold it overnight, then they require you for your margin account to have an initial margin of $3,740 to hold it overnight. And then if you're going to hold it a couple of days, $3,400. All right. So initially, let's just talk about the day margin, which is $1,000. You need to have $1,000 in your account to day trade crude oil. So let's come over here, and again, in the futures market, you can go long and short. There's no penalties for going short. You can go take long, short positions. Either way, it doesn't matter. If you think the market's going to fall, you sell first and buy back low later. If you think the market's going to rise, you buy first and sell back high later. So we're going to come over to our charts again, and I've got in here a range bar 7 chart. So this is a range bar 7 chart, and as you can see, this is today's market in crude oil. Buy the rumor, sell the fact. All right, so what we're doing is we're buying the rumor that 1,000 troops are going on over to Iran, and it's going to be very volatile over there, and it's going to cause the price of oil to rise in price. Of course, we got this early signal first thing in the morning. Of course, the Trump administration announced that after the stock market had closed last night, and so this was the first opportunity in the London session to start taking long positions in crude oil, and that started happening right around 5 o'clock this morning, and the market started to rise, and it rose all day. You can see the nice big long green trend. Of course, the software is making that green trend indicating a bullish trend. That's called the bulls and bears. The bulls and bears tells us when a market's bullish, bearish, and neutral, and it just points that out to us by changing the price bars red, yellow, and green. And then, of course, we have the yellow dots, which are a trailing stop system based on the ATR, or the average true range, and then we have the blue light system, which is a little bit more aggressive based on the bulls and bears system, giving you trailing stop locations, okay, as the market moves through price and time. Let's just come in here very quickly, and for a single contract, which is the smallest increment you can purchase in the futures market, we're going to go from the red arrow to the red arrow, and that was a $2,200 move today for a single contract. Remember, $1,000. So $1,000 gets you a single contract in the futures market on crude oil. And in this particular case, that move today was $2,200. Had you done and invested $5,000, you'd multiply this $2,200 by 5, of course, and that's how that works. And so, of course, these numbers don't represent commissions and fees, but this is your contract price average or contract price move through that trend this morning in crude oil. Now, if you want to have a little bit more information about how you can come in and you can trade crude oil, day trade crude oil with us over here on the futures market, swing by our website, www.tradementors.com. There's a free program over there that'll get you started. It's called the Heisenberg Strategy, and we'll give you more details about that at our website, www.tradementors.com, and you can come over and trade crude oil with us.